Okay, guys. Good morning. It's always a pleasure having you guys here. And of course, we're going to be talking about something very dear, something that we're all been witnessing. We're going to be talking about the Bitcoin crash, right? For a while now, we've been looking at the cryptos for months. And of course, the Bitcoin being the father of all the cryptos, we're going to discuss that now based on the crash, or should I say the impending crash, or the continuing crash. At the end of the day, it is all in the charts, right? So it's a pleasure having you guys all here again. My name is Tolu of CSA Forex. Please kindly note as a disclaimer, everything we're going to be talking about is for educational purposes and not as a form of trading signal. Please take note of that. Okay, great. Now we're going to be doing something awesome, something unique. We're going to look at the market from the highest time frame down. We're going to do a multi-time frame analysis approach. And we're going to start with the monthly. If you look at the monthly that we have over here, right, you can see there was a time that we got to this extreme highs here of about 64K, and then we made a double top over here. From the double top, you can see the weak rejections that we had over here. And then this was when everything started. When I say everything, from last year, this was when we had the heavy crash on the Bitcoin and other cryptos. While it was moving, it moved in this manner. And then before you know it, we were calling for 18K. For months, we were talking about 18K. And then lo and behold, we got to 18K. That means that if you look at what we have on our chart, we got out of this range over here. Now, after getting out of this range, I'm going to show you something now. After getting out of this range, you can see the first candle that closed outside the range. This previous candle over here, you can see it popped out, but then closed back into the range. But then this first candle closed out of the range and got to that 18K area of interest, 18K, 90K key area of interest that a lot of traders have been looking at and of course calling as well. Now, when this happened with this big bearish candle, right, the next month we now had a pullback, and you can see the pullback was rather, you can't expect one pullback to take out this entire big bearish candle. So we had a good enough pullback over here, but then using the fib of this big bearish move down, the fib, you can see that it got to about 38.2 to 50 marker. And look at what is happening now. It is going back down, right? Over here, when it got to this untested area of support for the buyers, the bulls, you'd have expected them to come in strong, which quite all right, they tried. But then we're going to do something now. We're going to cross over to the weekly time frame because as you drop down in time frames, it starts to get clearer and clearer based on the levels that we have over here. So don't forget 18K area is key, and we're going to continue with that discussion. Now on the weekly time frame, looking at what we have over here, we got to that area here of 18K. Remember, we marked this area here earlier. So finally, we tested it as it was untested. After it broke out from this place here, you can see the big bullish candle that it used to break out. It never looked back until it got to that 64K area of double top. And then we had the fake out, as you can see, judging by the wicks, we had the fake out here with this bearish pin bar hammer candlestick formation, which started the entire drop. Now, looking at the story that we had, now from this fresh wave that we had over here, this is a fresh wave. From this fresh wave that we had over here, we're expecting, okay, we should have a tangible Fibonacci pullback. And that's why we drew the Fibonacci from these highs all the way to these lows over here. And you can see we're expecting at least for it to get to maybe 38.2 or 50 or even 61.8 in order for fresh sellers to come in and then take it back down. Now, the thing is that the buyers have to be at least, dominant enough at these lows over here, right? But that is not looking like the case as such. Now, I'm going to show you this from two angles. From number one, the prevailing trend that we have that is obviously down. That's why it is titled the Bitcoin crash. Everything is on the charts, and that's why we're showing everything on the charts now, right? Now, looking at what we have right in front of us, right? You can see this was where the buyers came in, and then we're expecting at least price to get to this area here, where we have this as a form of resistance here, and then we have support here, we have support here, right on the chart. So now we're expecting the price to come back here to this area, and this area, by the way, is the 30K marker, the 30K marker. So we're expecting price to get back to the 30K marker, where we would also, join this prevailing trend and then follow through on the short. But look at what is happening. The buyers for now are not looking, I repeat, the buyers for now are not looking strong enough. Now look at what we had here on the weekly. This was last week's candle. You can see this here is a bearish engulfing. A bearish engulfing. We had a massive drop last week in the market. And that's why I said I'm going to show you this from different angles based on the multi-time frame analysis approach. Because from here, you might not really know, oh, why did it drop? Why did we have this big, massive candle? What happened? For you to answer that question, now we're going to drop lower in time frames. We're going to drop to the next time frame, which is the daily. Let me just clean all of these things up. One thing you can also do to help yourself out is to watch this video a couple of times, and then it will help you to understand much better. Now on the daily time frame, you can see we had this bearish rising wedge over here. As we had the bearish rising wedge, we also had the levels, right, of the bulls. We call it the last line of defense, the last line of defense for the bulls. From this bearish wedge, it showed that the buyers were lacking momentum. The sellers too were also lacking. They were canceling themselves out. And then, of course, in this wedge that we have, following the trend, and that's why it's called a bearish wedge, by the way. We're now expecting it to drop, and if you look over here, you have a sort of bearish bearish hammer, bearish pin bar here. We're expecting to drop, and that is exactly what happened last week. But then look at what we said. We said 27.5. We mark this as the last line. I repeat, the last line of defense for the buyer, the last line of defense for the bulls. I can see now it is presently sitting here. We haven't gotten the expected reaction from the bulls, but the only thing we can do is to wait and see whether this level holds or breaks. This is the last line. If this last line of defense for the bulls, if it fails, then we can as well see this 18K, 19K marker tested again. And if that happens, trust me, it's most likely is going to be dicey. The Bitcoin might as well crash further, and might as well crash further to this area here of around 10K. The 10K area, you can see we have some support here, resistance, support. Everything dates back to, the flip zone. Flip zone is an area of support and resistance. And if this should happen, if this area here, this 18K, 90K area is always called an area and not a price point. So if this 18K area should fail to hold as support, then we might as well see 10K. And if this should happen, trust me, the Ethereum would also follow. Luna has been dead for a while, has been flatlined if you look at your Luna chart. But trust me, the rest of the cryptos are going to follow suit, and then it's going to crash some more. Everything is in the charts. I repeat, everything is in the charts. So if you are looking forward to following the trend or going against the trend, let me show you something. We stopped at the daily. Let's quickly look at the 4 hours time frame. The 4 hours time frame is now here, where we have this form of a bunch of support resistance area over here. As you can see clearly, we have a lot of it over here. So this area here is very key, very crucial to what we are looking at. I would have loved maybe just a little drop over here to test that 20 2750 area, or even just a breach of it, just to catch sellers that it wants to drop some more, and then the buyers coming strong and then they take it up. Only time will tell. Is the Bitcoin going to crash further? That is the question. Is the Bitcoin going to crash further? If it is going to crash further, you should have your areas of interest where you'll be looking forward to jumping in on short. For me, I would love to see 24, 25 area here as a retest, and then we load heavy shots and then take it back down and see whether this last line of defense for the bulls is taken out, and then we have the 18K. Now, what we have talked about now in summary is the Bitcoin impending crash. Is it going to crash some more? We already know how it has been from 64K, where a lot of traders were calling for 100K. And then I always tell people, do not argue with other traders. Everything is on the chart. Go and conduct your own market analysis. Once you conduct your own market analysis, it will let you know whether truthfully or not we're going to get to 100K, or we're going to get to 18K, or we're going to get to 10K. Let price lead the way. As price is going to act, it is for us traders to simply react to the market. So this is what we have over here. Price is presently at the area of support, last line of defense for the bulls. So if you're interested in buying, this second area is where you should be looking out for entering the market to buy, and then trying to take it some more higher. And quickly on the hourly time frame, this is what we have here. You can see everything is pointing to the downward manner because of the prevailing trend. But at the same time, this is a CT move, this is a counter trend move. You can see these areas here that are acting as a form of resistance here. So we'd like to see maybe a breakout here, a retest, and then push up to 22 or 23 and so on, right? So if you're looking forward to buying, this is what I have for you. But don't forget, it is a CT move, and that means that your stop loss should be well tucked below these areas over here. It could be tucked below here, but for safety, you could tuck it here and then watch it push higher. And trust me, the reward is very good, right? The risk to reward on this particular Bitcoin trade is very good. Please, please, and please do not forget, this is very key. Impending crash or impending continuous crash, because of course we'll be talking about the Bitcoin crash, the crypto crash, in the market for a while now. So I want to say thank you guys for watching this video. You can watch it again, pay attention to what happens, and see how you can take advantage of the market, either as a counter trend trader or as a trend trader. So I want to say thank you guys for watching. If this video was helpful, you know what to do. Give it a thumbs up. If you have any questions, comment in the section below, and then we'll see what we can do for you. We'll give you an update of how this plays out much later. You can see the price is trying to push higher, but we need this candle to close. This is the 1 hour time frame. We need this candle to close for us to be sure of exactly what it wants to do. Thank you guys. I remain Tolu of CSA Forex. See you at another time. Cheers, goodbye, and God bless.